Good morning, good afternoon, depending on what part of the country you're in. Thank you for joining us for today's Stand-by-Nest Ajera virtual user group. We're looking forward to today's content. My teammate Shauna and I have been having fun preparing some examples for you all. So we're going to go ahead and launch right in and get started and kind of get through our intros and housekeeping topics as quickly as possible. So we really want these user group meetings to be about you. These are user groups, and I can't unmute everyone because that would be a little bit chaotic, but we want your questions and your ideas and your input, and the best way for you to be collaborating with us throughout these user group meetings is to submit your questions and ideas in the question box. We don't monitor the chat box, so we're manning a lot here, presenting and manning the questions box. So please feel free to use that conversationally to throw out your ideas, your user tips, your questions as we go through today. We'll both be taking turns monitoring that questions box, and we'll answer as many questions as we can during the meeting. But if by chance we don't get to your question during the meeting, we will follow up with an email. We will make sure that we get a response to you. Directly after today's meeting, you'll receive a survey. Your feedback is truly invaluable to us, so it's very short, only a couple questions. I really ask if you would consider just taking a few moments to complete that survey. The handout for today's meeting is in the handout section of the GoToWebinar pane. You can retrieve that now. The handouts that we're providing with these user groups, these are more kind of casual, informal meetings, but we do like to kind of document key concepts. So you'll see there's some screenshots of some of the things we're going to run through in the training in our live data today. So hopefully that's a helpful reference document for you. If you are interested in receiving the CPE credit for this hour, we need you to answer all 3 polling questions, complete the survey, and on the survey indicate that you're requesting the CPE. I'll be reminding you of that because it's critical that all of those boxes are checked. There's a national governing organization, and we have to qualify these. So I'll be reminding you of that as we launch our polling questions, though. So for those of you who may not be as familiar with Stand-by-Nest, I think most of you have probably attended prior meetings. We've been in business over 100 years. For more than 60 of those years, the firm's focus is on the AE space. So we have team members across the US. We recently got some international clients. That was exciting. So we serve clients all throughout the US and internationally. We are a Deltek partner, top 60 value-added reseller. And we've just listed some other areas where we have teams that could potentially help you. And then just briefly, because we want to get right to our content, but for those of you who have not met us, we wanted to introduce ourselves quickly. So my name is Val Higgins. I'm the Managing Director for the Ajera Consulting Team and for Project Management Consulting and Training Services for Stand-by-Nest. I've been in the industry, honestly, my whole life. I've had an opportunity to sit in the chair that you all sit in, so I've got boots on the ground experience as a CFO and VP of a multidiscipline engineering firm, 10 years user experience using the Ajera software in a client office situation like you do. And then I've had the opportunity to be a consultant as well. So I'm gonna let my teammate Shauna introduce herself.
Thanks, Val. Hi, everyone. I'm Shauna Pace Powers, and similar to Val, the majority of my career has been in the AEC industry. I implemented Ajera for my firm in 2006, so just pretty much right after it was first started. And again, similar to Val, I have that boots on the ground experience, but also have provided consulting to multiple different types of firms. And so I think what we bring is our ability to see how the the system is working for different types of clients and bring you guys some good tidbits of information, which we're going to focus on today.
Thanks, Shauna. All right, so let's cover our agenda for today. As you know, we're going to talk about invoice adjustments. And so we're going to walk you through the various types of adjustments that we think are common or see commonly. And there's a couple different ways to set up those adjustments. So we're going to walk you through that. We're going to show you some common issues that we see with adjustment. So as you all know, we help clients with their Ajera, and so usually people reach out when there's challenges they need help with. And so we're going to show you some common issues, and also we're going to show you how you can find those in a quick monthly review. So we're going to show you how to set up those adjustments in projects and on client invoices, because we can do it either way. And then, like I mentioned, how to review your adjustment GL activity monthly, because it's really important that we're paying attention to that piece of things. We will probably have time for questions and answers at the end of today's meeting. But like I mentioned, we really want you all, we want this to be about you and very collaborative. So please just throw your questions in that questions box as we go. But we're going to get us started with kicking off with one of our polling questions. So our first polling question is, do you know where to find the default GL account associated with invoice adjustments? And just as a reminder, if you are going to request that CPE credit for this hour, I will need you to answer all 3 of the polling questions and complete that survey. And I don't want to frustrate you by repeating that over and over, but I don't want anyone to be frustrated if we don't tick all those boxes either. So I'm just going to give this a few more seconds. We've got about 80% of you voting, but I do want to give everyone, that wants to answer that polling question an opportunity. So I'm just going to keep an eye on this for a second. And when I see it slow down, we'll stop it. Yeah, so I think we've slowed down here with about 90% of you voting. So I'm going to go ahead and close this poll. Thank you all for responding. So 56% of you said no. So I'm glad that we're covering this. So 100% of you are going to be able to say yes, we know, after we get through today's training. So what exactly are the invoice adjustments anyway? Some of the common situations we see invoice adjustments being helpful with are withholding and billing retention. And we're going to walk you through a process that I personally have used successfully, because as you all know, Ajera doesn't have an option when you're setting up your project to say, hey, we have to withhold retention. So we'll show you something we've come up with that we feel could be a really beneficial workflow for you. Pro bono work. And Shauna's going to talk about that in a little bit. A lot of times folks might think they want to set up those pro bono projects as non-billable, but Shauna's going to give us some reasons why we think we could maybe do it a different way and use a pro bono invoice adjustment. And then, we have those dreaded overruns. So on an hourly phase of a project, we may have a not to exceed budget, and then we exceed it. So if we want to show the client the value of all the work they've received, but only bill them that not to exceed fee, invoice adjustment is perfect. And Shauna is going to walk us through an example of that as well. Client discounts. So I haven't run into this too often, but there are clients that I've worked with in the past where they do offer discounts. And so we can automate that by adding that client discount to our projects, and we're going to walk through that. And then recently we seem to be running into this more, and we have one client where this is a significant challenge. And so what about those foreign exchange adjustments? As we know, Ajera is not multi-currency, so we're probably billing in US dollars. When we get paid, if we're getting paid in another currency, there's typically some kind of adjustment we need to make. And so we're going to show you how we feel you can handle that. And you know, the thing about using these adjustments and kind of our focus on adjustments is if we set them up appropriately, you'll get some really beautiful GL accounting from these as well. So those were some common, you know, types of adjustments we thought we would cover today. Shauna, anything you'd want to add to this slide?
No, I'm excited to get in the data though.
Yeah. All right. Um, so common invoice adjustment GL mapping issues. You know, we're going to walk through this in the data. We're going to talk through this and the importance of selecting the correct GL accounts. And this is, I believe, something that is commonly not understood. And our polling question kind of illustrated that as well. You know, about 60% of us really aren't sure what that default GL account is. So in our company preferences, and we've provided a screenshot here for you, there's a default location for our invoice and project adjustments. They're kind of the same thing, our adjustment phases. So if you don't select a specific GL account when setting up an adjustment, the system is by default going to come and use your miscellaneous revenue account. And this is a screenshot from our sample data. This would be a setup we would recommend where that is mapped to a miscellaneous revenue account. Yours may not be, you know, so I'd recommend you checking this out, right, today after the user group. But again, if we don't select a GL account on our adjustments, the system is going to select it for us, and this is the one. So any adjustments are going to land on our financial statements as miscellaneous revenue, which really may not be where we need them to be. So that's my first bullet point. Another common issue that we see is we pick a GL account that isn't appropriate. And this is just a training topic for your team. So anyone on your team that is, you know, setting up projects that could potentially set up an adjustment phase, or anyone on your team that is working on client invoicing, we really need to train them through and maybe document. Like, so we've got some clients have really cool like accounting manuals that have screenshots and documentation on what GL accounts should we be selecting. Work in progress is not an appropriate account for this. And so that's why we kind of use that as an example. So that's a really common issue, picking an account for my adjustment that is not appropriate. So I think what's important to know here, and I think, you know, Shauna will kind of walk us through this when she shows us some actual client invoices. But when we finalize an invoice that has an adjustment on it, the total before the adjustment is what is recorded to our revenue accounts, and then the adjustment is after that to whatever account we tell it to. So we have to think through that. We've recorded revenue prior to the adjustment. Where should that adjustment go? Should it be, you know, reducing the revenue recorded, or do we want it to a special account? And again, these slides are just meant to be kind of a reminder for you, the things we've talked about. Shauna is going to give you some great examples in the client invoice. Shauna, anything that you'd like kind of tack on or add on here?
No, I know that someone just asked about credit card type of adjustments, and we're not doing that as one of our examples, but yes, we could create an adjustment for a credit card type of fee on an invoice.
Oh, that's a good one. I wish we would have thought of that, because
I know.
that would be like an add-on fee, right? We're going to charge more for using that credit card. So yeah, that's a great question. Thank you, Donna. Okay, so promise you guys we're getting in the data right after this. So I'm going to go ahead and launch our second polling question, which is, do you understand how invoice adjustments affect project and financial reports? So I'm gonna, again, give you all a little bit of time. I want everyone to have a chance to respond to this. And as a reminder, if you're gonna request the CPE credit, I do need you to answer all 3 of these polling questions and complete the survey. And you guys are coming in pretty quick. So we're almost at 90%. I'm gonna just keep an eye on this for a few seconds. I want everyone to get their vote counted. And it does look like we're slowing. Well, actually, you guys are picking back up. We'll just give it a second. Yeah, looks like we slowed down and 93% of you voted. So thank you very much. And this is very similar to our first polling question. So 55% of us said no. We really don't understand. And that's why we thought this was a good topic, right? And, so our goal is that after today, you definitely will have a better understanding. So I'm actually going to get into the data now, and we're going to look at how to set up some adjustments for retention, client discounts at the project level. And then we're going to look at a couple of reports as well, so we can start building that understanding of the project and financial reporting. So I've prepped some data for us. So the first thing I thought we would look at is retention. So at my last job, where we used Ajera, this was kind of a common thing for us, and that's kind of where I figured this out. And what I'll just tell you is, like, when we're presenting solutions like this, there could be complications. We're going to present a very simple kind of solution here, right? There could be complications and extra things we would have to think of here. But this really worked well for us, and I'm going to explain a few things here. So we've set up 2 adjustments, one to withhold our retention and one when we're ready to bill it. Notice my withholding is active. I can keep my billing on preliminary, so it's not like available for editing on my client invoice, until we're at the tail end of the project and we're able to go back and bill that retention. So, we really want to dip into these types of controls and make sure that we're very thoughtful in our approach here. So let's just take a look at how the adjustment is set up. And if you don't know, to add an adjustment, you just say new adjustment here, and then it adds these orange lines. They're called adjustment phases. So they're actually kind of like phases on your project for a specific purpose, and these are reportable and reporting. So important to know. But when you see that, I don't know, they call it orange, it looks yellow to me. But so once I added my new adjustment, I named my first one. I wanted this one to be active. And then the place where we need to be paying attention is on this billing tab. These are where important decisions start happening. So what type of adjustment am I doing? Is it labor, expense, consultant? In some situations, we don't feel like this is the most critical piece of information because I'm controlling where this adjustment is going. So in this example, what we want to do is create our invoice. We want to show on the invoice to our client that we're withholding retention. And we want that dollar amount to go to a retention receivable account on our financial statements. So there's a lot of beauty in this, right? Because we're showing our client what we need to. So if we're not using something like this, either you're sending the full amount invoice and we're letting that 10% hang out on our AR aging in the 120 plus day column forever, right? Or you're maybe billing less and trying to keep track of that, or you're maybe taking your invoice into Word and editing. I've seen that. Either way, like this is beautiful because again, our invoice is going to show correctly what we've done and we've controlled where that 10% lands. Now, something that we also wanted to make sure that you knew is I had a choice here. So it seems like I would have chosen percent, right? Because I want to withhold 10%. Had I done that though, I would have had to set up 3 of these lines because likely I'm billing labor, expense, and consultant. And if my adjustment is using the activity type of labor and I put in a percentage, it's only going to reduce the labor portion of that invoice. So when Shauna and I were kind of talking about this and planning, we're like, you know, it probably just makes more sense to make that a flat amount adjustment where you would manually plug in the 10% of that invoice you wanted to withhold. So, you know, those are just kind of some user tips, but you see what we're saying, we're thinking through this. Like, do I want to set up 6 basically retention lines to get this right? I don't think so. So we're gonna, you know, find the most efficient way here on setting this up. So another item I want to talk about is this exclude from billed for reporting. And we're going to show you an example of this. I'm going to in just a minute. Shauna and I had quite a bit of conversation around this the other day. It was actually funny because we were trying to think of an example when we would check this box and we could not. So basically, if I was to check this box, whatever billing activity happened on this adjustment phase would not be included in my project reporting. And again, I'm going to show you an example in a second. We literally could not think of an example. Wait, Shauna, I think Donna gave us an example. Would credit card fees be an example?
Man, I have to think about it. You put me
Yeah,
on the spot.
no, it's okay. It's okay.
Maybe.
So
I want to digest that one a little bit.
yeah. So this would be the setup for our example of retention. And then my billing is going to be exactly the same. And I'm going to relieve that account when I come to bill this. Now, what I wanted to make sure you saw here, and this was the beautiful thing that I figured out at this last job where I had to do this all the time. I added a cap, and you can cap your adjustments like a not to exceed. So if 10% of my project is going to be subject to retention withholding, I'm going to put in a minus $50,000 because remember this is a reduction to my invoices. But then I'm going to go ahead and add back that $50,000 because I plan on billing it at the end of things. So the beauty is that just zeroed itself out and my contract amount remains correct for all of my reports. So that's our example of retention billing via the adjustment phases. And like I said, I have used this and was successful in using this. Shauna, anything I missed that
Well,
you think?
not anything that you missed, but I thought we had a really good question. And this was my issue too sometimes is how do you remember to go back and bill that retention at the end of the project? And their example was, Chris's example was that, you know, they're not allowed to bill that back for a year after completion.
Mhm.
So I don't
Yeah.
know if you have any input on that.
No, I would say the same thing you did. I would
Okay.
create a widget that listed all of my adjustment phases. You can use a formula that uses a like command. So we could easily create a widget that showed any adjustment phases that had retention in the name. And then we would just be looking at 0 billed values, right? And so like check that widget every month to see which projects are hanging out there. Plus we have that balance on our financial statements of retention receivable to remind us we got stuff we got to get billed. So I think both of those would help. Is that what you think too, Shauna?
Sorry, I keep unmuting myself.
Perfect.
Yes, I
All
concur.
right. Okay, cool. So that is our retention example. And then I wanted to show you an example of a client discount. So same thing, I would add my new adjustment. I'm going to get my yellow or orange phase. I'm going to name it client discount. Now here in my billing tab, I did use a percent. Now this is specific to labor. And this actually came from a client I worked with where they did a discount only for labor. So now if my discount was going to be off of my full invoice amount, labor, consultant expense, I probably would have done the amount option like we just showed you on the retention. But this is really important here. Like I can't really, I don't think we can overstate the importance of the GL account mapping. And I just also think this is a beautiful or brilliant kind of financial reporting solution, because now every month annually, we're going to just like that be able to see how many dollars did we reduce, our revenue for client discounts. It's just going to be right there, right in front of us. So really like this option. This is a good one for me to, well, actually I have another example because I want to now talk, I want to show you what this does because it's confusing, right? Exclude from build for reporting. Like every time I come to this, I got to really think through that. So I want to quickly show you an example of what we're talking about with that. So on our BART station project, we kind of set up some data, and in our example, our team spent $950 on an ad service that ended up not getting approved. So created an invoice for that where we used the adjustment to reduce this to the not to exceed number. But this, I think this is a helpful way to explain that exclude. If I would have clicked that exclude from build, when we reviewed this project in any report, it would have showed that we had billed $950. And in truth, we did not. We had to, right, adjust that off of the invoice. So again, like I said, Sean and I really couldn't think of any examples where you would check that box, but this is a good way for you to see how, this is reported. These adjustment phases are reported. And let's see if I could show you an example of that invoice. So you could kind of see what that looks like as well. So you see that we've got our hourly services here, Pat Hill, our invoice subtotal. This is what's going to be recorded as revenue actually. Then this is our adjustment, and we can kind of write whatever we want right here. So why didn't I just write off that $950? You might be thinking, because sometimes there's a lot of value in our clients seeing the effort that we've provided, but then we're not able to bill to them. So that's just a decision you have to make, right? Whether you want to show it this way or do a write-off. But that was kind of the path that we took for this. So one last report that I want to show you, and then I'm going to turn this over to Shauna because she's got some great stuff to show you. And so it used to be, this was a feature that was updated a couple of years back, and I was super excited because I used to reconcile my revenue accounts back to invoicing detail, which can be hard if you ever do invoice adjustments or reissuing of invoices. And then they made an update to the client invoice register that is amazing. And maybe you all know about this, but maybe you don't. I think I want to go to my April period. And I've already got my default set up, but I would want to run this by accounting date if I want to look at the invoicing activity for the prior month. Or any month, I'm gonna look by accounting date, because remember, our invoice and accounting date may not align. And this is the beautiful thing. You can sort this invoice register by GL account. And so when I do that, and I recommend you do this every single month as part of your monthly GL reconciliation, run this report, because look what this is showing me. My adjustments are clearly called out in a column. Somebody used the wrong account. They used a WIP account. That's not where we would make an adjustment, because WIP is managed just through the billing process. This would throw us out of balance if we were reporting work in progress to our financial reports. And then here is an example where I didn't pick a GL account. And remember, we talked about it's going to use my miscellaneous revenue. So if you run this client invoice register every month as part of your financial review, sort it by GL account, you're going to be able to so quickly see if mistakes need to be corrected. And these are mistakes that I would be correcting. You know, when you expand it, you see all of the detail behind it. Shauna, anything you would add on? I guess one other thing I'll quickly point out is these being orange is what's also saying it's a change or an adjustment. So, Shauna, anything you would add to that?
No, but I'm in agreement. The addition of that sort by GL on this report has been really beneficial for us, even finding issues in people's data when, for example, work in progress control accounts go out of balance with the subledger. So this is great.
Oh man, I'm telling you, I used to export my ledger detail for my revenue accounts to Excel and do all of this massaging and finding adjustments. And oh gosh, when this came out, I was like, hallelujah. So Shauna, I think I'll go ahead and launch our third polling question, and then I'll turn it over to you.
Fantastic.
So our third polling question, do you ever need to adjust invoices for pro bono work or not to exceed overruns? And I'm going to go ahead and launch that. And again, just a quick reminder, if you are going to request the CPE credit, please answer all 3 polling questions and complete the survey for us. That's required. And you guys are coming in quick, so I appreciate that, but I am gonna let this go for a couple more seconds, give everyone their fair share to get their response in. And it looks like we pretty much capped out at 87% of you voting. So I'm gonna go ahead and close this poll. 88% of you voted. This is really very telling, and I think it shows that this was a much needed maybe topic for us all to talk about. 78% of you said yes, that you do need to use these adjustments. So Shauna's gonna walk you through it and show you how, and we've got your screen, Shauna.
Okay, fantastic. So it does sound like you guys are in need of some of these types of adjustments for the work that you perform. One example is the pro bono effort that you provide to clients. And if they really need to see that effort as documentation for their financial reporting purposes, we really recommend recording all of your efforts to a project, generating that billable amount, and then reflecting the adjustment for those pro bono services on the invoice. So if you know off at the beginning of the project that this indeed is we are going to be gifting some services, maybe all of our services on this project. In this example, that is what we're doing. You can set that pro bono services adjustment phase up at the onset of the project. And again, just to kind of reiterate the things that Val was going through on her setups, the activity type on a pro bono service, this designation isn't as important because all types of effort are going to be adjusted to the pro bono contra revenue account. And we've set up a specific GL account to capture those pro bono services. Again, this is likely going to be some kind of amount that is set up at the client invoice level. So we have the adjustment phase ready to roll once we get to client invoicing, but I'm going to take you to the client invoice and show you how we make that adjustment at the time of billing. All right, I'm going to minimize my project command center, and we'll just pop into client invoicing. So our Oregon Food Bank expansion example, as you can see here, we've got some labor that we've put into this project, and we want that reflected on the invoice as pro bono. So we do see this invoice adjustment tab. This is going to contain all of your adjustment phases that have been set up on the project. So I can see my invoice total amount is $2,203.75. So I'm actually going to create a negative adjustment for that amount. Now the name of our phase is pro bono services, but if we don't put anything in our notes section here, we're not going to see that really reflected on the client invoice. So I'm going to call this pro bono services. And I'm going to save this. And I want to preview this invoice so you can see how this adjustment looks on the client invoice. Okay. Oops. Oh, excuse me. So here is our pro bono services adjustment. And that's going to be shown to the client. I put a little note in our scope text for that set of services there. All right. I don't know. Do we have any questions coming through on the pro bono adjustment, Val?
We do, but I'm kind of just flying through answering them, and I really feel like you're kind of covering
Okay.
everything. We did have one great question, that I was just responding to. Sue was asking, does this mess up your utilization report by showing this pro bono time as billable? And Sue, I would say I don't think so. Employees probably should not be penalized in their utilization because they've been asked to work on pro bono work. So it's billable to the project. It's just that we've decided to give that work to our client for free, as a way to build that relationship. I don't know if you have anything to add
No,
to
I think
that.
that's the exact perfect answer to that question.
Yeah, and then Roger asked, would you set something similar to pro bono work for work to be recognized as charitable contribution? And I said, yeah, I think you could.
Exactly.
Yeah, so that's what we've got so far. So thank you.
Perfect. Perfect. Well, I think that's kind of a pretty straightforward, simple example. The next example I want to talk about are those projects where you have true not to exceed types of contract amounts. And I know when my companies that I've worked for historically were predominantly time and expense billing, not to exceed our contract amounts. And I would go through somersaults and cartwheels to try to get and tie out that exact billed amount to tie back to my contract amount. And one way that we can get to that exact contract amount and bill it full, even on a time and expense project, is through an adjustment phase or set of phases on the project. Now, all of the examples so far, I think that we've shown, we've set up the adjustment in the project, but we also have the ability to set up our adjustments in our billing stage. So I'm going to show you that on our Gleason Lofts project. So just to give you a point of reference, our project manager has told us that we essentially need to write off down to our contract amount of $75,000. So in this example, we're going to be adjusting the invoice by $1,902.02. I'm going to close out of here. Okay. One thing that you may see is that we have labor and we also have some expenses associated with this. And just so you can see that we can set up multiple adjustment items, I thought I would do one for labor and one for expense. And again, we're going to be setting up specific GL accounts for that write-off. And so I think this is a good example for us. So in the bottom, right now, we don't have a tab for our invoice adjustments because we didn't set one up within the project itself. So I'm just going to go ahead and add an adjustment. And this is going to be labor and TE. And this is going to be for our labor write-off amount, essentially. I'm going to make this an amount, and our going to map this to our contra revenue account for write-offs. So that is down here in our professional fees write-off amount. I'm going to adjust this just a little. Sorry. Guys, they're all watching me type today. Okay, now we do have an invoice adjustment tab. And for this, I'm just going to call this my labor write-off. I'm going to create another adjustment for my expense write-off. And then we'll see what that looks like on the client invoice. I might not have done math in my head right, so we may have an additional change to that adjustment. So I'm going to map this expense adjustment to our expenses write-off account. And let's go ahead and save this. And I'm going to preview this adjustment. And I'm close. I need $2 extra. So when we have multiple adjustments on our invoice, we don't really have an easy way in the invoice format itself to call out each of those line items. So as you can see, even though I'm entering some notes here, it's not really allowing me to save, and it does just show my invoice adjustment on the client invoice. It's kind of there, right? It doesn't break them apart, I guess is what I'm trying to get across. Okay. So I'm going to go ahead and bill this final because at the end of my examples, I want to take you to our financial reporting so you can really see how all of these adjustments are working for us. So I'm going to print that as a final invoice. Just to push that through to our financials. Okay. Any additional questions on time and expense not to exceed adjustments?
I don't think so. I mean, I think I'm getting them all answered, and I
You're doing
think,
great.
yeah, yeah, okay, yeah.
Okay, perfect. All right, so the final example that I wanted to go through together, Val mentioned that we seem to be running into this more and more frequently with clients, is an adjustment for foreign exchange. So we bill in US dollars, the client has to adjust that to their currency, and then we take in a certain amount from the client, and that can be more than what our invoice amount showed, and it can be less. And when Val and I were talking about this example together, we really tried to find the easiest and best way for this to be recorded. You end up finding out about this at the time you receive payment. It's not something that you know when the project is set up. It's not really something that you know when the project is invoiced. So our best solution so that we can capture everything to the right general ledger account and so that we can correctly apply the payment is to actually revise a finalized invoice for that item. So I'm going to show you the setup in the project just so you can see how this gets set up. We know, at least at the onset of the project, that we're going to have that type of adjustment on the project. So let's look at this one as an example. Oops. And you can see here that we've created the foreign exchange adjustment phase, and again, created a specific general ledger account for those adjustments. Pretty straightforward. This is, again, going to be a fixed amount that we adjust on the client invoice. Okay, so we get this payment in for a client invoice, and it is more than what the invoice was for, and that's because that exchange rate is in our favor, at least in this example. So again, just our thought process, the best way and for us to record this is to revise the original client invoice that this is associated with. So I'm in my client invoice list. I need to go find that final invoice for our light rail expansion project. And we're actually going to be revising this invoice. I'm going to edit the invoice and change this to a reissued status. Looks like my accounting periods are open at this point, so I'm going to go ahead and use this accounting date. We're behind in our reconciliations, Val. So on our text and amounts tab, I want to add this foreign exchange adjustment. Now, as you're seeing, we can't get to the original foreign exchange adjustment. It's not showing here. So we're gonna adjust this up by $200. And this will go to our foreign exchange adjustment account. All right, I'm gonna save this and print this final so that we can take in that receipt. for the full amount. All right. Okay, well, let's go into client receipts, and I just want to show you how that payment now gets allocated across our different phases. So I'm going to be in client receipts. We know this is for our light rail project. Okay. And just so you can see, I'm going to select pay by phase, and you can see our different phases that are applied here. You can see this foreign exchange phase. So I'm going to pay the entire amount, and this way we'll now see this $200 on our financial statement. It gets applied there.
Hey, Shauna, while you're moving on to that report,
Yes.
we did have a question from Melissa. I don't know if I'm really following it, but maybe it will make more sense to you. Why wouldn't you just let that be exchange gain or loss? I don't know if she's referring to the GL account we chose to use. Does that make?
That maybe that is the question.
Yeah, I'll
So
see. Yeah, Melissa, maybe if you give us a little bit more information, we'll come back to this so we can make sure we get your question answered. All right, thanks, Shauna.
yeah, no, absolutely. Okay, so I do want to process through a couple of other finalized invoices. So again, you can see at the end of this how all of these different adjustments that Val, that I have been preparing during our work here today. I'm gonna go to draft, and we'll just see how those land on our financial reports. This is one more. All right. So while I'm waiting for that to print, let's go take a peek at our profit and loss statements. I'm just going to use a standard P&L. I'm going to look at the whole year. All right. So as you can see here, because of our adjustment GL mapping, those entries that we created on our client invoices within our project setups are all now landing and recognized on your profit and loss statement. Val's example of retention would be on the balance sheet. And I'm not sure if we finalize that invoice, but it would show up in our liability account. Okay. And then if you really want to get to that detail, if you peek at your ledger, we can see exactly what was going into our pro bono, for example. I think we did it in April. And there it is. So I think that brings me to the end of my examples, Val. I don't know if we have additional questions. I've kind of been focused on the Ajera data, and I know you've been fast and furious answering. I feel like this is one of the most interactive sessions that we have, just tons of good back and forth questions. So really excited to see that from you guys.
Yeah, I think so too. I think there's one that I missed. It's kind of hard to scroll through this list. It was about
Yeah.
finance charges. And I think basically what I was going to respond is that if it's finance charges, I would use the finance charge tool.
Yeah,
I can't find it, but we'll get to you. If I'm sorry, I'm looking for it, but
yeah.
we will respond to that one.
So yeah, Val, and this is again just how do you want to present information to your client? I worked for a company who wanted them to see that billed on the client invoice and make it right up front when they were invoicing that they were behind, and that we expected them to pay that charge. And so admittedly, you have to be careful when you issue your credit memo if you're going to write that off. You want to make sure that you're writing off that specific adjustment line, so that pay by phase checkbox needs to be selected. But that is one way to record that interest charge on a client invoice.
Yeah, and one last question, Mary Lou. How do you invoice the final retention on the final invoice? You're going to use the retention billing, not withholding, and you're going to plug in the whole amount. And there we go. All right, so I am gonna kind of wrap us up here. I wanna make sure to be respectful of everyone's time. Shauna, I think I see a couple questions coming in, maybe if you have time to get some answers in while I
You
wrap
bet.
us up. I'm just gonna quickly run through these slides to just show you. This is kind of the information that, well, it's not kind of, this is the information we're providing in the handout. And we really, again, just wanted to kind of give you some screenshots and some bullet points on the information that we verbally covered. Now, keep in mind, you might have complex situations. And in some of the questions that I answered, you know, I did my best, but like it would depend on how your projects are set up. So please, you know, use this as kind of a broad stroke guide. If you need more help, we're always here to help folks. But you really got to kind of think through all of the moving parts of that project and your financial and project reporting. So to take us home today, our best practices tips: be sure to specify a GL account on all adjustments. It's so important. Make a review of that client invoice register sorted by GL account. Make that part of your monthly review. I was so excited when they came out with that. Consider sending those pro bono invoice reports to clients, because I've run into a lot of people who make those projects non-billable. I don't like it because you don't get the spent value for your own analysis, but I think we missed an opportunity, because if we don't send that report, our clients don't know how much love we just gave them. So, and you can always put that love note on there in the scope like Shauna did. So really, you know, maybe think through doing that. Gosh, I had so much fun today. These meetings are so energizing for us. I hope they're helpful to you. We want them to be. So if you have a success story, if you've done something interesting in your software you think would help other people, please reach out to me. We've had two guest, you know, user co-presenters this year, and that is awesome. And really, this meeting is about all of you. It's not about us. So please consider co-presenting with us. I would love to talk to you about it. If you have topics you would like for us to cover in future meetings, please throw those into the survey. We hear widgets a lot, and so you know, we might have something coming up on widgets in the future. But any, you know, topics you think would be good for us to talk about, please do complete that survey. You will need to complete it if you're going to request the CPE credit. It's one of the questions it asks you. So if you haven't already joined our LinkedIn SN Virtual Ajera user community, we're trying to stir up conversation. I know a lot of you are members. What we were hoping to do with that space is make it a safe and collaborative space for you to throw questions out to your fellow Ajera users, and our team monitors that. So, you know, if you think that would be helpful, there's a link in your handout for that. And again, we just want to hear your ideas. This is all about you. That's why we're here. And we want these to be fun. We want them to be educational. We want there to be value here for all of you. And you guys are giving us a lot of love and value. So appreciate getting to spend the best hour of my day so far with you all. Shauna and I are just grateful that you joined. So thank you so much. I hope everyone has a great rest of your week.